Last time on Learn from the Money Masters, we caught up with former soapy star Blair McDonough. Blair has big dreams for the future, but he's a long way from achieving them.
Quite frankly, at the moment, I don't think that you've got a plan and you're probably on the way to falling short.
I realised that my building strategies are probably not going to get me to the destination I want to be, so I've got to really make a good effort at becoming an investor.
Today, we follow Blair's journey as an investor. Get ready to learn from the Money Masters. We're about to take Blair to meet some of the best money masters from around the world. These masters of money are the real deal and manage billions of dollars. We're going to check in with Blair to make sure he makes the most of the experience.
The opportunity that I really want you to see now is the one we're going to put in front of you getting to meet our fund managers. They're prepared to give you a masterclass on what they know about managing money. And these guys are incredible brains.
Yeah, right.
They get real pleasure out of helping people grow wealth. This is what they do. Like doctors create physical health, these guys are all about giving people financial health. I love that you've fallen back on building. That's your sort of plan B, and it's a good plan B, and you've got property. But imagine an opportunity where you don't have to do anything to a property, there's no work involved, and it gives you an income along the way.
Well, that's the thing. I'm sure that's a lot of people's goal, and when you say that, make money, it's like, yeah, of course, but I have no idea how to take the first step.
Just by making some decisions now, it can really affect your outcome, and it's not that much work. So I want you to have your ears pricked, listening for the things that you could do now, that you and Christy could decide to do in the next 2 to 5 years, that in 30 you'll look back on this experience and go, that changed my life.
Yeah, right. No pressure.
All right, so let's look for opportunity for Blair. I'm excited to introduce you to them all.
I'm excited. It'll be good.
First up, we're taking Blair to meet Brad Potter from Nikko Asset Management. Brad is the head of Australian equities at Nikko, one of the largest wealth management companies in Asia. The company manages over $239 billion, and Brad has over 27 years of experience growing wealth for Australians.
I think I've always been a value investor at heart. It seems to be my DNA. The Nikko Australia Fund Management business is a value investing business. We look at things in the long term. We invest in stocks, thinking about them from a long-term sustainable earnings basis. We're looking actually at what the intrinsic value of a particular stock is, and what we're trying to do is invest in stocks that are trading at substantial discounts to that intrinsic value, and we build portfolios based on that philosophy. So as a value investor, the price you pay is actually really important. That's one of the key determinants of your long-term return. We have well over 1,400 meetings a year looking at companies, looking at their competitors, trying to understand the company in detail. We model the companies, trying to understand the earnings, the cash flow, and based on that we actually come up with our intrinsic value. And what we're trying to do then is invest in companies that trade at a discount to that value. I don't mind paying up for things, but I need to know the value of stuff, and even in my car, value came into it back then as well. Hope to help people achieve financial independence in the long term, and I just think that'll be a wonderful end to my career to actually know that I've helped so many people reach those goals.
Brad's invited Blair up to Palm Beach to share the secrets to his success with money.
I thought it'd be good just to start with the basics. Blair knows a lot about property. He owns 2 properties. He's even getting into building himself and doing up properties, but he needs to diversify. He is an actor, so his income goes up and down. He needs income to smooth out that ride. Can you start by telling Blair a bit about shares? Because he has expressed fear, he doesn't really understand it. So let's start the masterclass with that.
Effectively, shares, you're actually owning a portion of a company, a small part of them. You can own a mining company, an electricity company, an industrial company. effectively you're buying a portion of that company, which is really quite interesting. You're actually owning part of an Australian business.
It's like a little piece of society, really, isn't it?
Yeah, it is.
What Brad's doing is choosing a whole bunch of shares, and there's a whole bunch of reasons you're doing that. So explain that concept of managed funds.
Yeah, so managed funds are a way to diversify and effectively take away that risk. A lot of people have problems and, worry about investing in individual shares.
Yeah.
We do that day in, day out. That's what we do. So we build a diversified portfolio of 40 to 50 shares. And so in effect, you're owning a portion of that portfolio, which owns a portion of all the companies that are in that portfolio.
You're kind of alleviating my responsibility to manage my own shares.
Yeah, correct. So you don't have to individually worry about an individual stock that you may own because we've diversified that risk away by having 40 to 50 stocks in that portfolio.
Okay.
One of the big things that the finance industry talks about is philosophy. So Brad tells me he's a value investor himself. Tell the story of your car, right? Because you're the only person I know who's ever bought a car that 20-something years later is worth more than when you bought it.
20 years ago, I went looking for a car that I wanted to drive and it wasn't going to lose its value, and I ended up buying a 65 Mustang convertible. I didn't have a midlife crisis because I hadn't reached midlife at that stage. So, it's appreciated in value. I haven't made a lot of money out of it, but the point is it hasn't lost value.
And it's more than 50 years old.
Yeah, it's older than me. And I think that was just part of my DNA. I mean, I just need to know the value of everything. That's exactly what we do day to day in buying and selling stocks, is we want to find cheap stocks.
Obviously, Brad, Blair wants to find an investment that's of value over the long term. This $3 million he'll need in retirement and to get his kids through education. He's got a long way to go, but he does need to smooth out his income, because one of Blair's objectives is to actually have some income along the way if he's making an investment. He needs something that smooths the ride over the next 5, 10, 20 years.
Yeah, sure.
How do you do that?
Look, the wonderful thing about our income fund is it actually does exactly that. So in effect, it's all about giving an ongoing income stream to use how you would like. So in other words, you can either reinvest it or you can take it and use it because you want to go on holidays, you need it for buying another car. And then in the interim, we've got this long-term capital growth occurring as well if you want to retire or whatever you want to do with it.
It's a bit more realistic, isn't it? Because there are things that you want to enjoy and, with your family and with my goal set as well, is that freedom of adventure as well. But to know that you can have some of it now and a big portion of it later, it's very appealing, and it's just something that's just, I guess, I haven't been taught.
Brad, thanks so much for spending time with us today, because I think Blair's looking for, broadening his horizons, and your mindset's all about investing for the long term, looking for value and having a plan over the years, not just the short term. So a great lesson for us.
Yeah, it's definitely turning my kind of hope into a strategy, which is a nice little cog to shift in my brain, so it's good.
That's a good way of looking at it, turning hopes into a plan. And yeah, thanks, Brad. I think they've really given us some clarity over one of the ways you could do that.
If you want to learn more with Brad, head to theinvestmentseries.com.au, where you can take Brad Potter's masterclass or download our free ebook on becoming an investor from leading advisors. After the break, we'll meet the guardians, the gatekeepers of the investment industry, who will show Blair what he needs to know to make his dreams a reality. Earlier, we took Blair to meet a master of money, Brad Potter. And Brad gave Blair a masterclass on investing and his successful approach to money. Now we're going to put Brad's ideas to the test in front of the guardians, the gatekeepers of the investment industry. They are the heads of the top investment research houses in Australia. Amanda Gillespie is the joint CEO of Lonsec Fiscal Holdings. David Wright is the director and joint founder of Zenith Investment Partners. Heather Brilliant is the former CEO of Morningstar. The Guardians are here to show Blair what he needs to know to make the right decisions for his future.
Blair's got a good story in the sense that he's done a lot of stuff, but he's still got a lot to do. He lives in Byron with his beautiful wife. Christy's about to have their second baby. They've got a little girl already. Blair is committed to his acting career, but anyone who knows acting knows it's up and down. You can be in the money one minute and without the next. So one of the things we're taking him on this journey for is to understand how to stabilise his cash flow and his income. We had a session with the financial advisor, Simon, which showed Blair needs 260 grand over the next year because his wife's on maternity leave. That kind of freaked him out more than the bigger number, which is 3 million to retire.
Through this journey so far, I've learnt that some of my goals and aspirations are very high and very outlandish, and maybe that is a sacrifice that I'll need to monitor once I learn more about this.
Yeah, absolutely.
So Blair, you talked to me a lot about trust and how do I know who to trust in this market? These three run the businesses that really help people trust what they're investing in, and certainly help financial advisors trust because they're doing the due diligence and the research on the managers, their philosophy, their product, their background, their performance, that make sure they get the ratings so that advisors can access them.
Right. So us consumers can have a little bit more faith.
So I'm hoping you guys can ask the right questions to help him figure out what sort of investment strategy he could come up with.
It's probably the fear of trying to understand money that's probably kept me away from it. I'm pretty good at spending it, I won't lie to you. My wife's even better at times. But one of the big things is the fear of investment, definitely, because that is something I'm fearful of. So, you know, education can heal that for me.
Exactly.
But is there an X factor to some of these products? Is there something that you can't pick that sometimes performs better than you'd ever imagine?
I think it really comes down to investment process. And so I think if you can find managers that have a philosophy that they really stick to and adhere to in good times and in bad, that is a sign of a really strong manager.
Okay.
And that might seem obvious, but in fact, quite a lot of managers feel pressure to outperform. And so you see them straying away from their own investment philosophy when it's not working.
Yeah.
But you do want your money to be working hard for you. Hopefully your money's working harder than what you are. And there's a big difference between the best performing managers or products in a certain asset class and the worst performing. So you want to be invested in those that are really outperforming the market and generating that excess return.
That would be a really good thing for us to tease out a bit more when we're speaking to the managers, is to give you a better understanding of when they might underperform and not to panic when that might occur. Some of the managers we're talking to, because they have a certain style and that will be suited to certain environments, and conversely it will lag in other environments. And again, it points back to having that patience to kind of ride out the cycles.
Yeah, so one of the things I'm going to be looking out for is the income and capital growth breakdown and how that'll fit with both the diversification and also Blair's short-term income needs as well as longer-term growth aspirations.
Absolutely, yeah. It's something that, you know, haven't really ever thought was possible. So to find a way into that would be fantastic.
You want to blend funds and managers that are going to complement each other, because as you said, you don't want underperformance. Nobody wants underperformance.
Yeah.
It's really important to look at your portfolio in its entirety and not the component parts.
All right, well, let's bring it on. We'll be sitting behind the glass panel hearing what you're asking, so bring the heat, as you always do.
After the break, we bring Brad in to pitch his ideas to the Guardians and see what the Guardians have to say about Brad's philosophy with money. Brad's about to pitch to the Guardians. How will he do under their scrutiny?
Hello Guardians. Nikko Australian Equity Team has been managing money in Australia for over 20 years. We are an active manager, a value manager, and our stock selection process is bottom up, which involves a disciplined, intensive research process. The Nikko Australian Equity Income Fund uses that process and builds portfolios that are balancing income for now, capital growth, and sustainable income for the future. ANZ is a wonderful example of a stock that found its way in the portfolio. Last year, in 2016, the stock was trading at an extreme discount to our intrinsic value. The market was concerned about the capital situation. It was also concerned about bad debts and asset growth. However, our research process could see that the bank was transforming itself. In effect, it was shrinking to greatness. It was selling off some of its poor businesses. It was actually exiting businesses that were low returning. And we could see that rather than being lacking capital, it was actually going to have excess capital. And that excess capital would come back to shareholders in the form of either buybacks or increased dividends. So as it stands now, the stock has actually rallied quite substantially from that point, and it's still actually delivering in excess of 8% dividend yield after franking credits. So, in summary, the Share Income Fund delivers income for now, capital growth for the future, and sustaining income also for the future. Thank you.
There's a lot of moving wheels, it feels like, in what Brad's talking about, with the capital growth as well as the income kind of growth as well. It seems like two parts of the brain working in unison to try and get the one outcome.
Yeah, and look, it might be good for you thinking about your income needs. Hopefully they pick that apart a bit further.
Brad, one of Blair's requirements is income, which is a common requirement for most investors, and this fund seems to be very targeted towards the generation of income. What sort of consistency does the fund produce? What can investors expect in terms of the level of income?
We aim to produce an income that's 2% greater than the ASX 200 after franking credits, which has delivered more than that over the last 8 years. The interesting thing about the market is that income has been very consistent over a very, very long period of time. Capital growth can actually move around a bit, but income is actually quite stable. So it's difficult to forecast the future, but we hope that in the future that it will continue to produce dividends in excess of 2% over the market, which was around 8% grossed up over the last 8 years per annum.
Brad, we've spoken to Blair about different styles of investment will perform differently at different periods.
Sure.
You mentioned the fund is a value style.
Yes.
Could you explain what that means in terms of when it might do very well and when it may underperform?
The way we think about value is intrinsic value. So we're trying to value companies on a mid-cycle sustainable earnings basis. And so the idea is we actually establish a valuation of that company, and if it's cheaper than what the market is paying for, then it looks attractive for us.
What happens though if everyone's doing that? Everyone's looking at those kind of stocks.
We actually establish a valuation of that company, and if it's cheaper than what the market is paying for, then it looks attractive for us.
What happens though if everyone's doing that?
I was just about to ask that.
Yeah, I guess it's about building the right portfolio as well. We're an active manager, and so being active, we're able to act on mispricing. So stocks are always mispriced, often emotional reasons. You know, fear and greed are some of the most powerful generators of alpha in the market. If we understand the companies very well, we can act on that mispricing at various times. I mean, ANZ was that example previously where it was mispriced for things that we thought were unwarranted, but it happens all the time.
Our understanding is that you're also able to use a joint portfolio manager structure for the fund.
Yep.
How does that work in practice?
The way the fund works is the two managers run independent portfolios, 50% each, and so the client sees the combination of that. We obviously run off exactly the same process. So the great advantage of having the dual portfolio manager process is you get the diversification of ideas. There's also redundancy risk. If one portfolio manager is out meeting a company, there's always a portfolio manager in the office looking after the portfolio.
Brad, when you think about your portfolio and how it would fit into a broader investor portfolio, how do you think it would best interact with a portfolio like Blair's, where from a human capital perspective, he has a very volatile income stream, and then from an investment standpoint, he's very exposed to property?
It actually provides income for now, so he can decide to use that income if he needs it for any of his daily needs, or he can reinvest that into the fund. It also, in the longer term, provides capital growth. So in the future, you actually have the increase in the value of the fund. Like if you just had $10,000 sitting in a bank account, you will get the interest, but you're not going to get any capital growth in that. So you get the benefits both from capital growth perspective, but also a nice income stream. We're looking for sustainable income and sustainable income growing over time as well. So a stock may be paying a 6% dividend at $1, but it may also then 4 or 5 years later be paying a 6% dividend when it's trading at $5. So the actual dividend you're making is actually significantly higher than what it was because of the growth in the business.
In periods where the market is falling, how does the process work in terms of defending or protecting capital?
You manage the portfolio depending on what's going on in the market and the valuations. We're a value manager, and our strong belief is in the long term, value is all that matters. So sometimes you may have a little bit of volatility in the stock market. The fund traditionally has a lower volatility than the market because of the stocks that it owns. We're managing that volatility all the time and trying to manage that potential drawdowns to the best of our ability.
Brad, what do you think are the biggest risks to an investor holding this portfolio?
Probably the biggest risk is just the market falling, but I think that's just a short term. Often though, that provides opportunities. At the bottom of the GFC, if you bought, then you made a lot of money. But if you're willing to look through that volatility in the longer term, and we think long term within Nikko Australia, so I think in the short term, it's the market volatility is the risk. In the long term, I think it's a very good fund for someone that's looking for income and capital growth.
Thanks very much for your time today, Brad, and your insights into how you invest.
Thank you very much, Guardians.
The Guardians did a good job of teasing out the more technical questions from Brad on how the fund works. He explained it pretty clearly. Do you think?
Brad has answered the Guardian's questions. What does Blair think now that Brad's been put to the test?
I think Brad pretty well represented the fact that this fund gives capital growth, so the money you put in is growing, but it's kicking off income quarterly as well. I think he did a good job.
Yeah, absolutely. I think he gave a really good holistic picture of his company, of his fund strategy, and I think his product, it rings very true to me and my position, and that ability to get some sort of income structure out of the investment as well as the capital gain obviously means a lot to me at this present moment. And the fact that when the working opportunities do come along that you can roll that in to increase your capital growth, it just seems a little more flexible, a little bit more realistic for my position.
Understanding how these work makes you think differently about property a bit, I think. Do you think?
Yeah, absolutely. There are a lot of moving pieces, and I feel with Brad's pitch there, especially with the income strategy and the growth strategy and the way his team works, working from the bottom up, which meant looking at companies and their structures, gives you that feeling that you can trust the outcome and trust the growth of it all.
I think that's a good point that you made, and he did a good example of that with that ANZ example he gave of ANZ shrinking to greatness, cutting bits off their business and selling out to get back to core business. Like, that's interesting. When you look at a business strategy, you've got to get small to get more profitable. Usually you think the bigger you are, the better it is.
Yeah. The fact that those principles, you can attach them all the way through, it reduces the fear of not knowing how a big company works. So you can, get involved a bit more.
Well, Brad did a good job. He nailed it. The Guardians asked the technical questions, but he sure knows his stuff.
Yeah, absolutely. And he gave, well, for me especially, a great snapshot of the way his fund works with the income and the capital growth, as well as a good snapshot of his company. He actually got a bit into the infrastructure there and showed that they've been working together for a long time, I think on average 12 years, which is really substantial, and, that helps the whole trust game.
Let's see what else is out there.
To learn more about growing wealth outside of property, visit theinvestmentseries.com.au or download our free ebook on becoming an investor from leading advisors. Next time on Learn from the Money Masters, we take Blair to meet one of Australia's most successful investors of all time.
It's not about next year's earnings. We're trying to find a bigger and stronger business of tomorrow.
Remember, everyone's financial situation is different. The information in this show is not intended as personal investment advice. We encourage you to find your own personal advisor who can help you with your own financial future. Visit theinvestmentseries.com.au to find out how.